Well guys, there is yet again another income-focused ETF that seems to at least have the potential to offer investors like you and I a massive amount of income in a consistent fashion without having any sort of massive NAV decay. This new ETF just came across my radar as of recently, and before digging too deep into it and deciding if or if not I personally want to buy some shares of it, which from what I've seen so far I probably will, I figured why not make a video about this new ETF, talk about it and learn more about it with you guys so we can sort of all be on the same page. Now again, as far as an income-focused ETF, this one seems to be pretty promising just from what I read so far going over the basic strategy. So if you're an investor that's looking to add some significant income to your portfolio ASAP, you're going to want to stick around until the end. If you are a dividend investor who wants to level up your portfolio, you need to be tracking your dividend income consistently. And that's why I created the perfect dividend tracker that I've used to scale my dividend income up to all-time highs over the last year. Now, along with this dividend tracker, you're also going to receive my A to Z dividend investing ebook, which shows you how I personally started from $0 several years ago to now where I earn over $7,500 per month in dividends. So if you want this tracker and the ebook, go to the first link down below in my description and grab it today. So the ETF we're talking about for today's video is ticker symbol XPAY or XPAY, and it says XPAY S&P 500 Target 20 Managed Distribution ETF, and this is brought to us by Roundhill. Roundhill Investments are the same guys that created things like QDTE, XTTE, RDTE, etc. And Roundhill is pretty massive as far as in the income investing world. So right when I came across this ETF as of recently, and for the reasons that it covers the S&P, I was interested right away. Now digging a little bit deeper into XPAY, it says stay invested in equity markets with XPAY. The Roundhill S&P 500 Target 20 Managed Distribution ETF XPAY seeks to provide exposure to the return of the S&P 500 index while offering a tax-efficient monthly distribution. Now this was also interesting to me because a lot of these funds, whether or not they do offer somewhat of a tax-efficient distribution, let's say that they do, a lot of times they don't necessarily say so right in the front and center of their homepage like this one. So this also definitely had me pretty interested. And again, not only because that's interesting to me, but also because I personally am looking to find different tax-efficient manners to receive as many distributions as possible. Now the overview for XPAY, it says, the Roundhill S&P 500 Target 20 Managed Distribution ETF or XPAY is designed to pay monthly return of capital distributions to shareholders at an annualized rate of 20%. While providing exposure to the S&P 500, XPAY is an actively managed ETF. So it looks like what they're trying to do here is something very similar to one of my other favorite income-focused ETFs from Defiance ETFs. I'm talking about SPYT, another ETF that is aiming to achieve an annual target income amount of 20% in the S&P 500 using options paid out monthly. So although it's not necessarily a brand new idea of utilizing the S&P 500 and then through options generating a massive amount of income for investors, this ETF still says that they're doing all the things that I'm looking for, so let's read on. It says there is no guarantee that the fund will be able to manage its income so that all or a majority of its distributions will be return of capital. So even though they're basically aiming to give investors like you and I a return of capital, they're basically saying right here that they can't necessarily guarantee this. Return of capital represents a return of a portion of a fund's shareholder invested capital and is not taxable in the year it is received unless the distribution exceeds the shareholder's basis in the fund. And we will go over return of capital a little bit deeper here in a second because especially if you're an income investor that doesn't really like paying taxes, at least not up front, return of capital can be pretty awesome. It then says, however, a return of capital may result in an increase in later gain of a sale of the fund shares or a reduction of a loss. Because a significant portion of the fund's distributions will consist of return of capital who does not want their principal investment in the fund to decrease over time, or also an investor who does not wish to receive return of capital in a given period. So I also like how they kind of break this down. They really take it seriously. Right off the bat, explain to investors that this fund is going to have return of capital some way, shape, or form involved with the ETF, which I think is important because I personally have been invested in multiple different ETFs over time. Things like QYLD, for example, which sometimes can give return of capital, sometimes not, and things can get pretty blurry come tax time. Now it then says why XPAY. It says number one, consistent distributions. XPAY seeks to offer consistent and predictable monthly distribution payments to shareholders at a rate of 20% annualized. Now this is a huge selling point for me personally, as I've been building up a 7-figure portfolio now for several years. Any different stocks and or ETFs that pay a consistent dividend or distribution consistently, whether it's monthly or maybe quarterly, it definitely helps me estimate about how many dividends I'm going to receive moving forward, where something like JETB and JETQ don't necessarily have a consistent payouts. One month might be 29 cents, the next month might be 60 cents. I really like the fact that it's consistent distributions though when it comes to XPAY. Now it then says tax efficient, XPAY seeks to target 100% of return of capital distributions. And again, I'm going to explain to you in a second and go over this and explore why this could be so powerful. Lastly, it says total return potential. XPAY seeks to match total return of the S&P 500. So how great is that? It's basically like you're getting exposure to the S&P 500, which I can't speak for all of us, but who doesn't really want more exposure to that? But instead of necessarily seeing capital appreciation gains, you're possibly going to see income coming into your portfolio. And on top of that, it's going to be tax efficient. At least that looks like what they're hoping for. So as far as everything I've read through so far, again, I can't speak for everyone, but this ETF seems to be exactly something that I'm looking for. An ETF that tracks the S&P index base, which is awesome, and tax efficient distributions, 20% yield at that. This is pretty good so far. Now, some more interesting facts about XPAY. Expense ratio is 0.49%. It's an actively managed fund. That's sort of what we're going to see. Anything from 0.5% to 1% at this point is pretty much what you can expect for an actively managed fund that has this sort of strategy, etc. Now, the AUM is only 2.37 million, so this ETF is brand new. It only came out since Halloween, and there isn't any massive amounts of money coming in as of yet. Now, interestingly enough, though, this ETF already did pay a distribution. It says that it's going to be paying a distribution monthly, which is also important, but it shows right here that on November 5th of this year, there was a distribution declared for an ex-dividend date of the 6th, and it was paid out on the 7th. 97.23 cents was paid. So it looks like an ETF that costs anywhere from around $58, $59 per share as of right now at least. It looks like this ETF could be paying investors like you and I anywhere from 95 cents up to $1 every single month, which is massive. Now, before we look at the actual performance of this ETF since inception, and I give you guys my final thoughts on it, I also wanted to remind you guys this one very important thing, especially in reference to this ETF. This right here is from Investopedia. It says, how is return of capital tax? This is a very simple question that a lot of investors have, including myself. I used to not understand this either, but it's as simple as this. Return of capital distributions are not subject to tax. So when you get paid the distribution, let's say from SPYT or even XPAY, you're not subject to tax. You just get to basically keep the money and then move along. However, though, once the adjusted cost basis of the stock or ETF in this case is reduced to zero, any non-dividend distributions are considered to be taxable capital gains. So basically, in theory, if this ETF just stayed trading where it was, traded sideways, and paid out 20% per year, after 5 years more or less, you'd be to the point to where this ETF now paid you back completely. It completely returned all of your capital that you invested into it. Therefore, at that point, moving on, you'd be taxed at capital gains. So basically, return of capital is more or less kicking the can down the road, paying taxes later on something, which again, depending on your situation, could be something you're looking for. Now, lastly, once again, looking at this ETF that's only been trading for a very short time frame. So far, like I said, it is trading in the upper 50s, which again, this can change moving forward. But even at this price point for an ETF that's going to be offering somewhere around 95 cents upwards to $1 every single month and have a very rock solid strategy, as far as I'm concerned, this ETF will most likely find a spot in my portfolio moving forward. And this is once again simply because I do believe in the strategy that this ETF is using, and on top of that, I personally do want more index exposure. S&P 500, you can never go wrong with that in my eyes. Not to mention the tax efficient strategy that this ETF also uses is a bonus on top. But now lastly, most importantly, when it comes to XPAY, the S&P 500 Target 20 Managed Distribution ETF, I want to hear from you guys down below. Is this personally an ETF that you would add to your portfolio? Let me know why or why not in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.